Hello everyone, my name is Yela, and in this trimester I took corporate finance class. And usually when you hear about corporate finance, you imagine those CFOs managing billion-dollar companies. However, I was studying this class, I was learning about VAC, NPV, cash flows, and I got to the realization, I am the corporate. I also have assets, I also have liabilities, I also have cash flows and shareholders, which are my family. And today I would like to reflect on three topics about the corporate finance applying to my personal finance. First is time value of money. Second is cash flow management. And third is leverage and a little bit about dividends. First, let's talk about time value of money and net present value, NPV. In the class, we learned that dollar today worth more than dollar tomorrow, and we use NPV for deciding the project. This summer, I did great financial decision. I did proposal to my fiance, and she said yes. That's why I need to save some money for upcoming marriage party, to which one you are also invited, professor, if you're watching this. For easy counting, let's say I have $1,000 to save, and I don't believe in the stock market very well. That's why I need to find safe options. Since I'm risk averse, I would like to invest into time deposits. And I divide it into the project A and project B. Project A is investing into the typical time deposits in the Hong Kong bank like HSBC, and project B is putting money on stablecoin time deposits like Binance. Let's see it on paper.
So for project A, we have 2.9% return, while project B is not very linear. We have two different stablecoin time deposit. USDT has 6.32% on $200 and further 1.32%, while USDC has 5.01% on first $8,000 since we're considering only 1,000 USD. So we're going with this return. And then NPV, we're calculating with the benchmark of the T-bill of 1 year, 3.6%. So we're using this formula. And NPV for project A is minus $6.76, while for project B is for USDT only. If we put $1,000, it's minus $12.36, while for USDC NPV is plus $13.61, which is already good. But let's try to maximize our value and combine USDC to $100 with higher return and the USDT with the also some certain return, and then we're getting the $16.14 return. So let's have a final decision. Of course, you will see that the option 3 combined USDT plus USDC is the best among these options. Probably I would choose this option also even without knowing NPV because it gives more output. However, concept of time value of money and main concept of corporate finance, maximizing shareholders' money, which is where shareholders I myself, inspired me to compare these different options and try to think about that. So it gave me a kind of thinking about out of the box, and I came with this option.
Second is cash flow analysis. Companies live and die by their cash flow statement. In Hong Kong, we have great ecosystem called open banking. Thanks to Professor Dorothy teaching this on the class. In my daily life, I use application called Planto, which use API to connect to all my bank accounts and credit cards, and also Octopus card. Thanks to this application, I was able to build income statement. For example, my revenue is my scholarship, cost of goods sold is my rent, food, transportation, and what is left is EBITDA, which is earnings before taxes and investments.
Plant application automatically categorize and analyze my data every month. So I get this type of the donut charts every month. And I can see where I'm spending most money and where I need to cut. Moreover, based on that data which I get, I was able to create my OCF statement so I can see where my money goes more strictly in a table. For example, I have recurring revenues, which is my scholarship, every month, 10,000 Hong Kong dollar. And in the September, I spent like 19,000 Hong Kong dollar, which was my net operating cash flow minus 9,350 Hong Kong dollar. Where it's coming from? I can see it coming from shopping. I bought these watches. For October 2025, I get into the budget. I cut the shoppings, even like the small shoppings from Taobao, and I get into the budget. In November 2025, I was a little bit irresponsible and went out too much, so I eat out a lot. That's why I overspending. I also can get the ratios, what category I'm spending more. It gives me clear sober view on my budgeting so I can projectile in the future and cut certain categories. Finally, let's talk about leverage and dividends. I'm using my credit card over 6 years and it increased from 10,000 to 50,000 over this time. So this is the similar when in corporate finance, when the company proves its credit worthiness and getting a larger revolving credit facility. I treat my credit card as working capital financing. First of all, I pay fully and in time. Therefore, the cost of debt is zero. Moreover, I can say that cost of debt for me is negative because I'm getting reward cashbacks. So what do I do with these earnings? I treat my parents as my initial angel investors. And recently I used my cumulative cashbacks and little bit of the savings surplus to buy my mother an iPhone. In my mind, this was a dividend payout to my shareholders. It wasn't just a gift, it was returning value to the people who provided my initial capital. Credit card is also a decision about leverage. In corporate finance, we learned that we have a capital structure, debt versus equity. And in my case, I always try to keep the debt less than I have money on cash, so I can cover it anytime without paying extra interest. It's similar when corporates balancing these debts and equities to not get bankrupt. So that's my reflection. Corporate finance didn't just teach me how to value companies, it taught me that I am the CEO of my own life. Whatever it's managing liquidity for wedding, optimizing daily cash flow, or paying dividends to my parents, the fundamentals are exactly the same. Thanks for watching.